New Bay Financial Partners look at the investment markets. Very interesting start to the year with the Swiss National Bank abandoning its cap on the currency. That saw quite a major appreciation there of the Swiss franc, and initially took equity markets into a little bit of turmoil as the market tried to digest what was taking place, because it really did come as a big surprise. Once the dust settled, the ingredients are still present in the marketplace for a reasonable rally to continue there in equity markets. Still got low interest rates. Obviously, the big debate this year will be sort of when and if the US start to raise interest rates. It's looking like sort of June, July time this year, with the US economy really pushing on at sort of quite a reasonable rate. You've got that very low unemployment rate and sort of falling all the time. And it really is about time the US started to increase rates and get them back to a more sort of neutral level rather than the artificially low level they've been at for the last sort of five, 6 years. So certainly quite a bit of debate on that. And, it's interesting really to see the currency. You notice that US dollar starting to gain in strength really across most of the currencies it's traded against, and that's really just starting to price in that expected interest rate move coming through later in the year. This week, obviously, the big news will be the European Central Bank meeting. It looks like Mario Draghi is going to announce some form of a quantitative easing. He sort of really gave some pretty broad hints to the market that's what they're looking at doing, and that's just going to be very interesting to see the size and the scale of that coming through. Certainly I think it's got to be pretty big, and it's got to be pretty major to have any sort of market impact out there. Obviously, the other big news has been oil. Oil has fallen dramatically over the last sort of 4 to 5 months, but really still gained a little bit of pace as well over the sort of holiday period, with oil now around sort of mid 40s per barrel, which if we look at it sort of 5-6 months ago, it was about $100 a barrel. So it's almost halved in that time, and it's going to be interesting to see how that sort of pans through. On the flip side, on the positive side, a lot of families really globally live from sort of paycheck to paycheck. So now all of a sudden they're going to have a lot more disposable income. That money's not going to be saved, it will be spent. So that should be good for the economy and sort of retail sales, etc. With that money being sort of pushed through the economy really quite quickly. Because potentially you've got maybe sort of $20, $30 maybe every week or a couple of weeks saving on fuel as petrol has fallen over that period of time. So at the start of the new year, obviously it is a good time to get that portfolio reviewed. Call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.